G'day guys, Sam Darby here and welcome back to Investor Insights. This week I thought I would start right at the beginning and help everyone understand what a yield is and the cash flow analysis of a property. So firstly, let's start with a yield. A yield is simply a mathematical representation based on how much money you're likely to achieve out of a property. So let's run through an example. A yield would be the rent times the period. So if you're earning the rent monthly, it would be times 12, number of months in a year, or weekly. So your rent times a week, times 52 to make it to a year, divided by your purchase price, times 100 to bring it into a percentage. So running through an example, $500 a week times 52 weeks in a year, so $26,000 a year in rent, divided by our purchase price of $700,000, times 100 would give us a yield of 3.71%. So guys, really simple to calculate yields on the fly. Simply, all you need to know is how much rent you're likely to receive and your purchase price. Guys, I'll be back in just a moment to run you through a cash flow analysis. Okay guys, what I want to do now is run you through a cash flow analysis on a property. When you have an investment property, there's a little bit more to it than just paying your mortgage. So let's run through some typical expenses that you'll see in the property. Obviously, we've got the mortgage, as we already discussed, council rates, water rates, strata rates if it's a strata property, building insurance, landlord insurance, guys, absolutely must make sure you get it. Any fees you're paying to agents, including lien fees, etc., and your maintenance. Now, guys, I do understand that not all properties require maintenance every year, so I suggest you treat your investment properties like you're running a business. Put some money aside for when you're going to need it. For example, if your hot water system needs to be replaced or repaired every 10 years, and it's going to cost you $1,500, put $150 a year into a special kitty, so that way when you do need to do repairs and maintenance, you've already got the money available, no more stress. So continuing on from the example where we calculated the yield on that property, let's have a look what it would look like. So guys, I've allowed for a 10% deposit on this particular property and an interest rate of 4%, which is pretty sort of typical at the moment. So the interest on this particular property would be $25,200 per annum. Council rates approximately $1,300. Water rates $1,200. Now this is a house, so there's no strata, so we're going to leave that one blank. Building insurance of about $1,000 per annum. Landlord insurance of $380. Agents fees $2,000, just include all your little incidentals as well, and the maintenance of $1,500. Brings us to a total of $32,580 in expenses. Now let's come over to the income side. We said we had $500 a week rent, 52 weeks in the year, brings us to an annual income of $26,000. Therefore, our net cash flow position would be our income minus our expenses. So in this case, $26,000 minus the $32,580, which would give us a net cost of $6,580. Now, you'll notice that the number is actually negative because it's going to cost us more money to retain this property than what it's making us. Guys, there is tax implications when it comes to negative gear properties such as this one. Make sure you speak to your accountant. Now, I understand it's a little bit tedious going through this process. I've actually made things really simple for you and created a spreadsheet where you can actually enter it all. All you've got to do is go to the link above, submit your email address, it'll actually download the spreadsheet for you, and you can get in there, play with all the numbers, and understand how the cash flow analysis tool works. Guys, if this message has been important to you, like the page, comment below, or share it with your friends. I look forward to seeing you for the next Investor Insights.